This session is really inspired by a comment made at Davos last year by the great son of Canada, Mark Carney, who's now sorting out the British economy and trying to save us from Brexit. And he said that finance was approaching its Uber moment, by which he meant that there was a potential of really dramatic technological disruption that would change the basic business models of finance, that could lead to apparently secure sources of profit and revenue for the industry disappearing overnight, that could radically change the kind of products that customers would use. And our discussion here is going to focus on to what extent that Uber moment has arrived, and I guess to see what Canada's role in the global Uber moment, if that's what it is, what Canada will do. I mean, and particularly, I guess, this interesting question of Canada's banking system having been, remarkably robust in the face of the rest of the global banking system getting into difficulties in 2007, 2008. Is that kind of oligopolistic structure going to be shaken up by technological disruptors, or is it a ballast against change? Will that actually help position Canada better for the long run, or not in the emerging global industry? And I'm going to start with Brett as a disruptor here from America to set up a company in Canada to try and disrupt the wealth management industry. Brett, is this the Uber moment?
Yes, it is. I think maybe it's worth asking, what does that mean, the Uber moment? I'm a huge fan of Uber. I've been using Uber since 2010 religiously. I don't own a car, so spend $500 a month on Uber instead. And to me, I think the thing that I admire, there are three things that I really admire about Uber. The first thing is that they've really revolutionized the consumer interface for ordering a car. So it's this push button experience. You tap a button on your phone, and then minutes later, a car is there to pick you up. So that's pretty incredible. I think the second thing that's really unique about Uber, and maybe a little bit less obvious, is they've really changed the sort of back office operations of the sort of taxi sort of ride-hailing industry. So previously you would order a taxi would come, drive 15 minutes to where you are, and then there would be all this sort of costs built into the system. But Uber has invested a tremendous amount of money in understanding where the supply and where the demand is, and minimizing the time that it takes from a car to get from point A to point B, which is dramatically decreased the costs that the company faces. And then I think the third thing that I really admire, and I think finance has to learn from Uber, is the speed with which they have extended their business model across the world. So basically what they did is they incubated the service in San Francisco for a year. They sort of got the model right. And then basically overnight they launched everywhere else in the world. So dozens of cities the following year, hundreds of cities the following years after that, and now they're everywhere. And I think when I think about finance and what we're trying to do at Wealthsimple, I think in many ways we're trying to do the same things. So we're trying to provide this sort of push button experience to our clients. I think one of our competitive advantages at Wealthsimple, as we've taken over more of the back office, is we don't have the same sort of legacy infrastructure costs. And we invest a lot in sort of making the transactions costs of operating a wealth management business as near zero as possible. And then third, I think one of the interesting things about starting a business in Canada is, it's a lot smaller than the business, than the market in the US. And I think naturally, as we think to expand, we think, where else in the world can we take this?
So Cameron, are you the yellow taxi in this story as a representative of the incumbent banking industry? How do you view this moment?
Matthew, I expected a slightly more delicate lead-in, but as Brett as Brett said, perhaps what you might expect from someone in his position, I'll say what you might expect from someone in mine, which
you don't have to.
I'd say not exactly, and this is a bit of a nuanced point. I would say that I don't think this is actually an Uber moment. I do think it's a pretty fundamental customer moment, though. I think it's a real customer moment with real disruptive change, and I do come from the position that disruption in this space is a good thing. A couple of things to just reflect on. If we're going to use words like Uber and other, you need to be specific about what we're talking about, as I think we did here. A couple of things that I would compare between that experience and this experience. Dreadful customer experience, I think, in the taxi industry. Brett did a nice job of describing the latency and cost and unpredictability in the tender. It's just all problems. We don't always appreciate it in Canada, but customer experience in Canada, from a financial services perspective, which is full service, which is multi-channel, has its blemishes, to be clear, is rated by Capgemini and others number one globally year after year after year. So I don't think you'd compare the customer experiences. From a regulatory perspective, rather a questionable regulatory system, license plate-based, limited competition, I think, in that industry. In our industry, we have 80 banks competing, I think, effectively in this country, domestic and international, and 99% of Canadians have a bank account. So I guess the other fundamental point is there's not going to be one winner in this game. And it's probably too much to say that Uber won that game, but they did a pretty nice job of it. And so I agree with everything that Brett said about what a beautiful experience that is and how important the efficiencies associated with a one-touch experience that delivers digital capability all the way through, including the back office processes, and the ability to scale radically. But I think that that's not the way this plays out in Canada. I think that there will be more players in the future than in the past in the Canadian market. I think that will be good for the customer, for sure, because the battleground will be around customer experience and efficiency, and of course that's good for the customer. But at the end of the day, things like trust, ability to work in the regulated environment, large balance sheet, millions of customers in a distribution network that's national and large, I think will play a larger role than sometimes people accept. But there are parallels to be taken from the Uber, but I don't think this is the moment.
And just briefly, I mean, in terms of what you're actually doing differently in response to that analysis, maybe do you want to just talk briefly about that?
Sure. I'd say the first thing is we're all, I would think it's certainly true of BMO, but I think it's true of all of our peers in this market, the ones that are here and the ones that are coming in, is that everyone's eyes wide open. This isn't about a disruption that's coming. We feel the disruption here and now. You see in the Canadian market net closures of branches in the last 3 quarters for the first time in history. You see a 5 times growth rate in mobile versus online. That is new. And you see new entrants of players in the market, including Apple Pay this quarter. So those 3 trends are really important. So organizations like ours are focused on new engagement models with our customers, which are really focused on mobile first. We no longer design things, manufacture products that are built for a branch or for a contact center distribution. They're built for mobile distribution to interact with those other channels. That's I think, one thing. And the second thing is this traditional system of hierarchy and organizational models is crumbling very quickly in many parts of many organizations, including ours, and where there's a recognition that perfection is the enemy and hierarchy is the enemy, and getting products to market very quickly with a focus on compressed release cycles is actually the focus of the day. And that's what I think we're learning from companies like his and the Uber experience.
I do know IBM is a company that over its 100 years or so of history has had to get through several disruptions itself, its own Uber moments at various times. Yeah. Does this look like an Uber moment for finance as you?
Well, I would agree with Cameron that there's a lot of differentiation between the taxi industry and the banking industry just because of the the long history of relationships, right? And the Uber moment was a shift where relationship wasn't a differentiator. Like I spent past 10 years in New York City, and I never liked the taxi driver. I didn't call the same one back. But when it comes to banking, the regulatory restrictions on any of the fintechs to be able to really disintermediate clients from the bank are restrictive. And then also the point solution nature of fintechs, right? I mean, there's so much value in the fintechs and what they can do within their particular area, but to have that full experience, it really hasn't come together, although I believe it will, right? These parts will assemble themselves and differentiate. What I do believe, though, is that the Uber moment, or the pressure of an Uber moment, has really transformed banking dramatically, because without that pressure, we would be doing, banking the traditional way with a passbook update printer at every branch. And so that pressure is critically important to drive the transformation in the bank so we get continuous value. And from an IBM perspective, I mean, we're enjoying working at both ends of the spectrum, right? Working with innovative startups and fintechs and helping them evolve, and with large financial institutions and helping them transform. But creating that link to be able to actually scale, integrate, and provide that security and regulatory capability that these small fintechs need. So the reality is, if the banks don't transform, then they will have their Uber moment. But I believe it'll be out in the future, and that they have time to make that transformation. And I think that, the relationship makes a big difference. And I have a driver, David. I could take Uber in New York City, but he's a great guy. And, I can't make that transition because of that relationship. And I think with technology, the banks can secure a personalized, customized relationship with their clients that, is extremely valuable and can be leveraged. And I believe they are going to do that.
I mean, I suppose certainly my own experience of my bank has been terribly unsatisfactory over many years. I don't think I wouldn't say I had a good relationship. I mean, they just seem to be determined to stop me paying my hotel bill when I go abroad by turning off my credit card and things like that, because I forgot to tell them. So, I mean, I'm just interested in the audience here. I mean, raise your hands if you have a good relationship with your bank that you think you could be stopped from being intermediated out of. Okay, so a reasonable smattering, okay. But how many don't have a good relationship? How many want their bank to be? Okay, so there's a market for you there, Brett, definitely. But I mean, Dino, you were telling us backstage that IBM has got this partnership with various incubators looking at helping fintech startups, including with Mars here in Toronto.
Yeah.
I mean, what do you hope for from that? Where do you see the potential for the startups?
Well, first of all, there's tremendous innovation, and in Canada we have brilliant students coming out of our universities, right, and all universities, and with great ideas. And my 6 years I spent with Citibank representing IBM through their transformation, what we were trying to do is bring fintechs in to help them transform their business. But we realized, they couldn't scale. One client, the integration, the security. So we thought, okay, how do we help these fintechs become viable in large companies like Citigroup? So what I decided to do here when I came to Canada is to build this incubator, non-branded, tied to every other incubator, so not to compete with Mars or Communitech, et cetera, but to really facilitate the development and the commercialization of these fintech solutions, and then bring the banks in to work side by side with them and understand how to change a culture to an innovation culture, and then figure out how to integrate these fintech solutions into their business so they adapt and transform themselves much more quickly. And obviously my own interests from an IBM perspective is to make sure they're doing that on my platforms and my cloud. But ultimately, we don't want to see these fintech companies that are evolving in Canada selling IP because they can't get to clients outside of Canada, selling their IP or selling their business in the US. We want to create jobs and create businesses here and assemble these components for them.
And it's interesting, Brett, I mean, the one critique I've heard of fintech in Canada is that it's really not very ambitious in terms of wanting to be that kind of global game changer that you described in your opening remarks. And one could even say Wealthsimple looks quite similar to Betterment and Wealthfront coming out of the States. And to what extent do you feel that's a fair critique, or is Canada a place where you could build a global game changer in fintech?
I think that critique is fair of Wealthsimple up until this point. That said, we just launched, I guess, under 2 years ago, and really the key to any startup is developing a flywheel of traction. And now we feel we're just beginning to reach the point where we can begin to think about new products, new channels, new geographies. So I think our team is certainly ambitious, and we would like to.
And what are the pros and cons of having an operation based here in Canada?
Yeah, I think the pros and cons are there's.
And you're an American who's sort of come here from Silicon Valley to start this up.
I think there's a few clear pros. One of the pros is we have incredible access to talent here. So especially software engineering talent, but also design talent, product talent, financial services talent in this city. And being one of the notable startups in the community, it's actually much easier for us to recruit the really top tier talent here than it would be, say, if we were competing against Facebook and Google and the big leaders in Silicon Valley. So I think that's one of the clear advantages. I also think that there's a little bit, I think we've had a little bit of a moat around us geographically. We sort of by nature are interested in entering the United States and interested in entering other geographies, but I think some of our competitors in the US are less interested in entering Canada. And I think that's a distinct competitive advantage that has given us the time to sort of develop and reach the point where we believe that we can compete on the global stage. In terms of cons, it's hard for me to think of. Well, I guess the one thing I would say, so previous to this company, I had founded another company in San Francisco, and I had participated in Y Combinator and raised a Series A from a Silicon Valley VC firm. The sizes of the communities are different, and I think therefore the prestige in some ways that comes with starting a company is somewhat diminished here. And also sort of one of the things I really love about the culture in San Francisco and Silicon Valley is that it's okay to fail. So most new businesses that start fail, and both the way failure is perceived and then also the opportunities that are allowed to entrepreneurs who have failed. I think my perception is that they're greater. That's one of the things that's truly unique about Silicon Valley. So just when thinking about starting a company, taking the risk and making the leap, I think it's a little bit easier there, perhaps.
So Cameron, we talked a bit about the Canadian regulatory system and so forth, and the barriers that that presents to a startup. And I wonder more broadly, as you look around the world, Canada has a very distinctive structure to its banking industry, a regulatory system that's served it pretty well, certainly through the crisis years. How does that regulatory structure of the industry here and globally affect your view of where fintech is going to be most disruptive and the extent to which Canada can play a leading role or a follower role?
It's a good thought. The point about, I think it does link to what Brett was saying, this notion that there is a real need for more global aperture in the Canadian market to understand where this can and should all go, whether you believe it's the Uber moment or whether you don't. I've described the reasons that I think that it's probably not. One of the reasons that I feel that is I think that the Canadian financial services industry is approximately where the Australian and UK industries were about 3 years ago. Maybe a touch more, but approximately. And by that I mean, at that time in the UK, for example, most people in the room will know that the Australian system is very similar to the Canadian, highly regulated oligopoly, 4 or 5 big players, similar age and stage, slightly different approaches to the way they have digitized their industry with a focus on core systems as opposed to other things, high mobile adoption rate, et etc. And the UK, driven to radical change for reasons other than that which drove Australia, primarily global financial crisis in 2008, in the need for the banks to clean up. But if you believe that we are where they were 3 years ago, and the characteristics of that dynamic in those markets were, on average, a customer in their banking system was doing two transactions probably per quarter in the branch, number one, and number two, approximately 8 to 10% of their sales were happening via digital channels. That was roughly the same in both of those markets. That's where we are in this market today. Put yourself now in those markets today, and they've had approximately a 50% reduction in branch transactions, so over-the-counter transactions, bill pay, deposit checks, et cetera. And they are between 30 and 50% of their digital sales via digital and specifically mobile. And so I use that as the basis for, while Canada's a well-run system, maybe the best, it has been slow to adopt. I mean, really slow to adopt digital, and there's 1,000 reasons for that. Part of it's consumer, part of it is no real need to do so. Those things are going away. I described the trends that have happened over the last 3 quarters, which say it's now. And so, my expectation is you do see a real drop in branch transaction. You do see a real increase in digital payments.
But it is very striking. I mean, in Australia, you've seen the stock exchange trying to embrace blockchain technologies, and you've seen in Britain, I think, London trying to set itself up as a global centre of fintech.
I think you'll see. Well, I think that there are many in this country who see that there have been great learnings in the UK, specifically in the last little while, around tech and potentially the role that government and regulation can play, and those are worth exploring. Probably what will happen in this market is I think that the payments regulatory environment will evolve relatively quickly. You see in all markets where interchange rates are quite high, innovation in payments is quite low. And that's where we are in this market right now. Interchange becomes under more pressure like it has in other markets, including the UK and Australia. You'll see innovation like P2P go up. We're seeing the early stages of that go on with new entrants in the market, and so that's positive for customer choice. That'll be first. On the lending side, you have alternative forms of lending. P2P less popular here, but more direct lending forms being popular. There are plenty of small business applications. I think what happens in this market on blockchain is there'll be participation more likely on a consortium basis, which is what you're seeing right now. We participate in the R3 group. We worked very hard to get live as quickly as we can in 1 or 2 applications. I know that your group participates in Hyperledger. And so these to me are really, really positive things because it's consortium-based, low cost, low risk, great opportunity to do what these guys do all the time, which is try things quickly, fail, fix, and get better. And so you might find this unique circumstance where some of the basics around self-service and payment and fulfillment on mobile phones are starting to come out at around the same time as we start testing practical applications of blockchain in our industry. Maybe loyalty on the retail side, maybe home ownership, maybe some form of payment on the corporate side.
And do you see the blockchain, as some people have predicted, wiping out large traditional revenue sources, certainly from intermediation? There's Larry Summers at our FinTech Summit last year in New York was saying, well, as he looked at the revenues of the financial service industry, he thought at least a third were from the kind of intermediation tasks that a blockchain type system, with its embedded governance and trust, would actually make those revenues kind of disappear pretty much.
Because I can't say no to the Uber moment twice, I will say that I do believe that there's the potential for blockchain to have a really meaningful impact on the financial services industry. But that doesn't mean that that's negative to banks, because we could be the ones benefiting from that impact. But presently, most of the applications that we're involved in are solutions looking for problems, and that needs to change.
I think revenues may go down a certain bit for banks, but it's also possible that the cost structure will go down by a greater amount, so it could be net beneficial for the bank.
Dino, you have this incubator. Where do you see the most sort of exciting startups? What are they focusing on? You've got the wealth advisory stuff, but what else are you seeing here?
Well, first, I want to comment on blockchain. Just we're making significant investments in that, and I think that from a Canadian banking perspective, it could be a significant threat, but we really need to have Canadian-based government policies and financial institutions involved in this, because we don't want to have our payments really being managed by some entity or engaged in from some entity outside of the country. I mean, this is a cornerstone of banking, right? So we can create tremendous efficiency and open up the market significantly, but
Is your sense the regulators aren't moving fast enough?
well,
on
we
this?
need to recognize that it's inevitable, whether it's blockchain, it was Bitcoin, now blockchain. I mean, there's got a lot of security has to be built
Ethernet.
into that. So it's inevitable, and we need to participate in it, but we need to do that with a view of protecting our economic situation, our banks here in the country. But on the incubators, IBM came out with Watson. I'm sure people have heard about that, but that is really a fundamental underlying technology that we want these startups to leverage. And I'll give you a simple example in the financial services industry. When you talk about really having that personalized experience, having access to significant amount of unstructured data, i.e., everything that's public, that's information about your client, having it assimilated and at your fingertips, so that when you're engaging with your client, their wife or they had a baby last week, and they just bought a home, and all these life events are information that are made available at the moment that their interaction with the client is happening. Changes the whole experience dramatically, and that's what we're trying to do with Watson and enable it with these fintechs, so that it creates a significant differentiation on how they leverage data. Because let's face it, fintechs are not about back office transaction engines, right? That was the traditional applications that banks were buying. What they want is systems of insight, systems of engagement, that front-end experience. And if you can front-end that experience by personalizing it and doing that with technology, and then it becomes a game changer. So you think, with Citibank, we're working with them in Asia, in their wealth management group, thousands and thousands of millionaires, trying to service them with a small group of wealth advisors. Really, when you sit down with the client and create that static document about what their objectives are, and then translate that into something that is alive and constantly changing, that wealth advisor is constantly informed about who to work with and who to engage with, who is going to be a billionaire and who's just going to be a millionaire, and how do they serve them in a more personalized way. That changes a company's ability to get to a mass market and pinpoint to where they are targeting their clients. And that's what we're trying to do with these fintechs, is really open their eyes to that. But plus, when you do that, you give them access to a global market. And in Canada, a lot of the business goes on between businesses, but to recognize that we can compete globally, that we have technologies and innovation that can compete globally, that we really want these fintechs to be, and these companies in Canada, to be net exporters of knowledge and net exporters of capability, and not just sending our people over the border with their intelligence. So,
Brett, comments have already been made about collaboration and so forth, and the theme of our Economist FinTech Summit in New York in October is going to be collaborate or die. I think we do have this sense that maybe whereas Uber was able to go in and just sort of challenge the status quo without actually having to be collaborative at all, maybe for the fintech startups that are going to make it will have to deal with an incumbent industry that has quite a lot of cards up its sleeve, including the regulatory sort of inertia. How do you view that as a startup?
Yeah, I think there's tremendous opportunity for collaboration between startups, and especially in the financial services space. If you think about,
is it going to be essential?
I believe so. So, Wealthsimple has actually chosen as its investor a strategic partner, Power Financial, because we believe they not only bring us capital, but they bring us credibility. They also bring us distribution networks. If you think about sort of like what we have versus what like large financial institutions have, we have, I think, very different and very complementary comparative advantages. So, we're good at attracting talent. We're good at iterating really quickly and discovering like what the right products are for the market. We're good at attracting sort of a new demographic. The banks and large financial institutions are really good at everything else. So they have troves of data, large installed customer bases, awesome channels for distribution. So I think there's really interesting opportunities for collaboration between startups and financial
So what do you see as
institutions.
the biggest challenges to persuading them to collaborate with you?
I think we're both afraid of one another, right? So, we're afraid that we're going to get stepped on and squashed. And, I think the large elephants in the room are, afraid that...
What'd you call me?
A yellow taxi or a large elephant? Which would you prefer?
Are afraid that we're going to trip them up or something, to extend the metaphor. There's obviously cultural differences, there's technical differences, but there's we can point to lots of interesting partnerships. One of the partnerships that I most like, that was announced yesterday in the US, that I would love to see here in Canada, is Wells Fargo has partnered with Xero, the accounting software, to give programmatic API access for its customers' data to the accounting software. So the idea is that rather than using these legacy systems of like giving your password to third parties and like having them scrape data from a bank website, the bank can be very specific. The client can be very specific about what information they want shared with third parties. So it's more secure. It's easier for everyone. That's an example of a partnership that I really like.
And Cameron, what about? You talked about collaboration. As the elephant. How do you create a culture of collaborating, of embracing startups?
Everything Brett said I agree with, which is we're coming at this from two different positions, but I feel very, very strongly, as I think most of my organization in the industry do, which is this is a better together scenario, definitely a better together. This is not about something called a fintech or not about something called an incumbent. It's actually about a customer who has an expectation around service and experience. I'd say just a couple things. I totally agree about the benefits that the newer players, newer entrants are bringing in terms of speed, agility, talent, customer centricity, and it's evident what the incumbents are bringing, balance sheet customers, et cetera. I've noticed a real change in the way this collaboration notion feels over 20 years. For 5 years in the late 90s into the early 2000s, I was trying to do something like what Brett had done here in Canada and also in the UK and Middle East. And although there was capital available because of the times that we were in, there was really no openness to get in to the large organizations who had the distribution that we were after. And that's not because they were protecting necessarily anything. I think that they felt there wasn't a customer interest, so the door was closed. And so we burned our capital and we went away with most of them. 2 years ago, I'm now I'm on the other side of the table, I suppose, but I felt more of what Brett was saying, which was an uneasiness or a lack of interest to engage. And although there was plenty of capital, there was a not sure yet that I need you. To me, that tone has changed meaningfully, even in the last couple of quarters, where there's an acknowledgement that incumbents are good and competition's good. I'm thrilled that Brett's in the market. Like this drives us forward, and we have a different approach to it than they do. We are, $5 billion in revenue, $900 billion in assets, and we're trying to disrupt ourselves because if what he's saying is true, we have a problem and we need to go, and who knows. But I think we're seeing partnerships on all levels. The difficult thing is the point that was made earlier, which is only 1 in 9, 1 in 10, 1 in 100 of these companies is actually going to be useful in the medium term, and it's having the capacity and the skills to weed through that based on a very specific thesis around what a customer wants, to decide how to engage. And that's where we're, I think, investing the most resources right now, Matt, is how to do that quickly.
And we've got a first Q&A question from the audience, which builds on that. And that is, as you look across the banking financial services industry, what are the areas that seem most ripe for disruption and which are likely to be able to remain undisrupted for
Do you want me to have a quick go?
Why don't you
and
have
then
a go and then
others can
the
take?
others, yeah.
There are plenty. There are plenty, and this goes back to the fact that I don't think there's going to be one winner in this situation in the end. I actually see in the medium term banks being the center of an ecosystem that has many more players within it, and profit pools will be cut away at by other players who do certain things better. What are those things? I think it starts in the payments area. That's where the battleground has really started. Retail payments and new incumbents wanting to play some role, and existing, some role in the payments ecosystem, whether it's through open wallets or prop wallets, or through maybe existing players, network players like Visa, MasterCard, Interact, participating in the tokenization space. So payments is one. Small business is another. Brett made reference to some of the capabilities that accounting software can bring with financial services. There are 5 or 7 core capabilities that small businesses need. There is no need for a bank like mine to build them ourselves. There are lots of people doing this very, very well, and I think that's another area where things will happen pretty quickly. And then I think that there are the bigger ticket ones, in which I would include blockchain and machine learning, where players like IBM will do very well.
Anyone want to add to that at all?
I think that was a really good summary. Obviously, payments has been is in the process of being disrupted. One of my favorite startups in this space is TransferWise, which is a London-based startup that is disrupting sort of the international sending of money. So I think one of the interesting things broadly is that like the bank has been all of these different things, and you slice off payments. Not only do you slice off payments, you slice off foreign exchange in particular.
Yeah.
So I think we will probably see a real sort of segmentation of like what banks have traditionally provided versus what's provided in the future.
Yeah.
I'll just add to that. I just, if we just don't take a product view of this and take a customer view, I think the biggest exposure is, the millennials and how they do business, right? I mean, and how a bank starts to transform itself to actually attract those millennials, because they are, I mean, if you're buying real estate in New York, I mean, you're going on Street Easy, you're finding your property that you want at the price you want, you're going to an open house, picking the place, going on LendingTree, getting your mortgage, and then, hiring a lawyer if you have to, or getting one done online, and closing. And there's no bank relationship that was traditionally created, for many of us who developed their first relationship with a bank when they opened their savings account or had a life event of getting a mortgage. And what I think that's the biggest threat in this fintech transformation, is being able to shift your bank culture and shift your client experience that it matches to where that generation is. They're not, my father goes to Scotiabank every week and checks his balance.
Do you think they're even going to recognize the concept of what a bank is in the terms that
No, they think differently, and I think that's a great benefit of fintechs, is that, and you didn't mention this, but if you put a bunch of fintechs in a room with a bunch of long-term bankers, the fintechs will think about, and millennials will think about banking in an entirely different way and open their eyes, and that's really tremendous value about, what is the banking relationship all about, and what is the payments relationship all about?
Hi, Michael Rodnick, Wassair Group. Just a quick question. Is Bitcoin gone, and do you see something that could come back that might emulate that as we go into fintech evolution?
Okay, we'll take also the question down the front as we're quite short of time. There's an article in this week's Economist that says there's a Bitcoin bubble that's reflating again, so that may answer the question a little bit.
Hello, my name is Karsten Arend. I'm president of BitRush. We're a publicly traded blockchain technology company. We're already doing.
Oh, you're going to answer the
Could you answer the question,
Exactly. We're already doing 500,000 microtransactions a day, 10 million unique users on our websites per month. So we've got traction listed here in Toronto on the CSE. My question is, from the standpoint of both the consumer and from the standpoint of the financial institutions, where do you see those two parties have the most pain that blockchain technologies could actually solve or take away? Thanks.
Dino, do you want to take both of those
Well,
questions?
you know, I've always envisioned, you know, a digital money, right? And if you think about consumers moving money, you know, to other individuals in their family, I mean, just the complexity and the cost of doing that now versus having a Bitcoin or a blockchain capability of transferring money ubiquitously, I think eliminates a lot of that, right? I mean, if I wanted to pay rent or pay someone, I mean, it's just eliminates the complexity of setting that up and then doing that in a secure way that I know the person that's getting the money is the person I want to have that money through a secure ledger system. So I think just transacting, you know, business, and then you think about the small business who goes into China to buy parts for their, you know, for their business, and they have to set up letters of credit and introductions and so on. That complexity versus just being able to transact and get the goods shipped, it just simplifies that tremendously and allows, I think, a lot easier flow of payments, which the ATM business did for us, and that liquidity, you know, boosted our economy. And I think that's what blockchain will do. It'll create so much more liquidity and fluidity in the movement of money.
Can people buy Bitcoin on Wealthsimple? Or?
No, we don't support Bitcoin yet, though. We should think about it. It's been appreciating a lot over the recent weeks. This may be an advertisement for your company, but the application I'm most excited about for Bitcoin is microtransactions paying for content online. So, you know, if I wanted to read the Economist article on Bitcoin, I don't want to have to type in my credit card details and subscribe to The Economist. I just want to push a button that sends you guys.
I'm sure you're not allowed to say that on stage. You're supposed to say you're supposed to get your credit card out now and subscribe to The Economist.
But anyway.
Cameron, do you want to come in on that?
I participated in a, hopefully this is a helpful specific answer to the question. I participated in a conversation last week in London with 12 retail and commercial bank CEOs and their CIOs and a few leaders from your industry specifically. And this was specifically the discussion. What are the applications? Solution looking for a problem or problem needing a solution. And everybody in the room had consortium-based arrangements had their own dev shops trying stuff and working on it to learn, really, I think, and to grow talent and capability and things that no doubt you've proven you already have. On the retail side, the specific conclusion I came out of that with 3 potential applications that are worth exploring quickly. The full home ownership experience for a consumer, number 1. Number 2, rethinking loyalty and rewards, and specifically the redemptions. Canadians love the rewards, but it is a complicated, unnecessarily complicated experience to redeem, and a more fluid way of making those real was, I think, a pretty big thing. The third retail one's escaping me right now. The other area we focused on was on corporate payments and smart contracts.
Great. Well, we're almost out of time. I'm just going to ask each of you to do a bit of crystal ball gazing very briefly. If we were here again in 5 years' time, do you think that the revenues of the Canadian financial services industry will be significantly higher or lower as a proportion of the total GDP? And secondly, will the number of jobs in financial services in Canada be higher or lower than they are today? Why don't we start with you, Cameron?
In the spirit of avoiding a headline, I am going to tell you that I think that the profits will be in line to up, achieved via different ways. And it's more difficult for me to say what will be happening on the jobs front, because I think this is a large and expanding digital economy, and there'll be plenty of work in that regard. Perhaps it's not the same work, but there'll be plenty of work.
Brett?
Well, in 5 years' time, I would like to see a slightly different market composition of the financial services industry. So I'd like Wealthsimple to have a lot more employees.
And what about jobs? What about jobs? Is this going to be good for jobs or not?
Yeah, no, I think it will be good for jobs. Obviously, there's working at a bank branch and programming an application are not necessarily the same skills. So there's going to certainly be some skills training required. But Yeah, I think for sure.
Last word to you, Dina.
Yeah, I think that the banks will be different, and I hope that they're going to be different in the sense that they are going to be more exporting of their capability, leveraging the reputation and the security associated with the Canadian banking system, and that the jobs will be fewer, but the new jobs that will come in will be all the jobs that are going to be there to protect, the security of the bank and the regulatory elements of the bank, so cybersecurity capability, engineering, and then systems of insight, and having people really be in place to help create that personalized capability. So that traditional, role that can be, computerized into a Watson solution, I think is going to be gone. You'll see fewer branches, but we'll have more highly skilled knowledge workers, right? And we can take advantage of the reputation we have to get to a global market.
Great. Well, I think this has been a really informative conversation, so I'd like to thank the panel very much. Big round of applause.